I'm Alex Rodriguez.
And I'm Jason Kelly.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
That is a harsh lesson in business.
Sports is not as simple as bringing a bunch of big names together.
I didn't want to do another stomp you out speech.
It opened up so many more doors.
The show is called The Deal.
Listen to The Deal.
Listen to The Deal on Spotify.
Thanks for choosing this free Anfield Index podcast. If you'd prefer to listen to this or any of our other shows without adverts, then now's the time to check out Anfield Index Pro. With AI Pro, you can supercharge your entire listening experience. You'll not only get all of our podcasts without the ads, but you'll have them far faster with our Quick Publish feature available exclusively for subscribers. AI Pro also puts you in the heart of our sound studio, with an option to listen to many of our shows live and interact with the podcasters in real time as the shows are recording. Upgrading couldn't be easier. AI Pro is available on all popular podcast platforms, and we have our own apps for Apple and Android. Just head on over to AnfieldIndexPro.com and get started today.
Hello listeners, I'm Chatra, and welcome to the return of Money Talks right here on Anfield Index. And it's a great subject to be talking about. It's the publication of the annual accounts for Liverpool Football Club, accounts that were published just in the last few days. And there has been some good analysis produced over on X, formerly known as Twitter, by a number of individuals. And one of the best pieces of analysis is by finance analyst, a guest that we've had on here on Money Talks before. It's Greg Cordell. How are you doing, Greg?
Doing well. Appreciate you having me back on, Mo.
No, I'm more than delighted to have you back on. In fact, it might have been when we talked about the accounts being published for 21-22 that you're on about a year ago. So really enjoyed delving into the analysis that you produced on those accounts a year ago, and sure we'll do the same now. But yeah, more than happy for you to be back. And yeah, I mean, in terms of the headline position, then if we get stuck in, the accounts show that in overall terms, the club's revenue pretty much flatlined at rounded up 594 million. To be completely accurate, revenue was down £500,000 overall, but nonetheless 594 million. And that was achieved off the back of the club having a less successful season on the pitch compared to the season before, finishing outside of the top four, therefore missing out on the Champions League spots, and also being knocked out at the first knockout stage of the Champions League, whereas again, as we all know, in the season prior, getting all the way through to the finals. So despite a disappointing season on the pitch, off the pitch, certainly in terms of revenue, it was a different story in that the club generated pretty much exactly the same amount of money as it did in 21-22. And also in terms of the overall bottom line, the club did generate an overall loss as well, just a tad under a break-even position. So overall, the club will look at itself and feel that despite the lack of success on the pitch and some of the additional revenue that can be generated as a result, to still come close to break even, generating almost as much money as the season prior, at least off the pitch, was somewhat successful. So what are your overall reflections, Greg, on the club's finances before we do delve into some of the specifics?
Yeah, I think you you hit the nail on the head. The revenue resilience, in spite of a 30 to 35 million drop in UEFA linked revenue, to have commercial, another double-digit growth year, strong commercial performance, and having that performance without the maybe reliance on some of the big core partnerships increasing. That this was, driven by merchandising and there was the incremental preseason tour. But I think that I was expecting a slight drop, so I thought I was happy to see that revenue was able to come in, pretty stable. The small loss, I think, we'll delve into the wage bill, in the course of our discussion, but I think that came in a little bit higher. Was a little surprised to see that number, and that kind of trickled down to contribute to that small loss. But I don't think that a small pre-tax loss for Liverpool is too big of a deal.
Yeah, absolutely. I concur. I mean, in terms of revenue, I like yourself did project for it to be somewhat lower than it ended up being. So certainly commercial revenue, which we'll talk about now, is an area that certainly helped achieve that financial resilience. And with commercial revenue, then it is impressive that it hit 272 million pounds, which marks a 25% increase, give or take, over a 2-year period compared with the 2020-21 financial year. So under the circumstances, that's a pretty impressive level of growth, and achieved during a time when the only key deal that came into effect during that period was the new Nike deal. It did commence in the 2020-21 financial year, and 22-23 was year 3 of its 5-year deal. The Standard Chartered deal, as listeners may recall, though it was renewed last year, the new terms only took effect in this current season, 23-24. So despite that, the fact that there weren't any of the kind of prominent commercial deals that were renewed in 22-23, there was still pretty substantial growth. And I did a while ago suggest that the club would be looking at hitting the milestone of 300 million for commercial revenue in the next couple of years. And given the trajectory of that in the last couple of years leading up to 22-23, I certainly feel that is achievable in the next couple of years. So what do you make of the club's commercial performance then, Greg?
I think it's been I think it's been impressive. I think that you're right about hitting, and I think within certainly in 24-25 it'll break through the 300 million barrier, and it should be at least knocking on that door for 23-24 when you look at the extensions and upsizes with Standard Chartered and Expedia. And in the current year, we're seeing some pretty strong blue chip names in that second tier sponsorship range that I think will move the needle a bit. There's going to be a couple things that maybe pull back on commercial revenues, maybe some bonuses from not being in the Champions League and not having events, non-football events staged at Anfield. But I wouldn't be surprised to see another 25 million or so year-over-year jump in the current year. And with merchandising operations expanding. It's progressing well. I do think that there's on the horizon going to be moderation. It's not going to continue to grow at 10 to 12% year over year, but right now I think we're still in a period of pretty stout growth, and that's really it's the fastest growing segment. It's really carrying the overall growth profile.
I'm Alex Rodriguez.
And I'm Jason Kelly.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal making across sports, media, and entertainment.
That is a harsh lesson in business.
Sports is not as simple as bringing a bunch of big names together.
I didn't want to do another stomp you out speech.
It opened up so many more doors.
The show is called
The Deal.
Listen to The Deal.
Listen to The Deal on Spotify.
Listen up. I won't sugarcoat it. This is the longest cold, flu, and allergy season we've ever seen, but we're not alone. We've got Instacart. Sure, you may be a coughing snot faucet who just wants mommy, but you're not giving up! Not when cold medicine, fragrant herbal teas, and honey shaped like bears can be delivered through Instacart in as fast as 30 minutes! Now let's go win the sick playoffs!
Daddy, I just want my soup.
Oh, sorry, Sport. App says it'll be here in a few minutes. Instacart for the win.
I don't need a VPN. I've got nothing to hide. This is what I used to tell myself before I hooked up with LibertyShield.com. Not only is my home internet now fully encrypted, but I can now access all the websites I want, whenever I want, and do so from absolutely anywhere. As a Liverpool fan, I love to know I can now watch every match, regardless of whether it's on UK TV or not. My Liberty Shield VPN makes sure nothing is blocked and guarantees me super fast streaming speed throughout that match. You can get connected right now with their software package, which includes a 48-hour no-obligation free trial and instant access to their apps for Apple, Android, Fire TV, PC, Mac, and Android TV. Or go a step further like I have and get one of their pre-configured VPN routers. These small but powerful devices allow you to easily connect every device in your home to VPN, making it the perfect solution for smart TVs, Mac boxes, and games consoles. Visit LibertyShield.com today and use coupon code AIVPN25 to get 25% off at checkout.
And it's I think we're seeing similar strong growth in peer clubs. Tottenham's had strong growth, especially linked with their stadium. Arsenal's picking up pace on the commercial growth, so it's important. But I think Liverpool's performance on the commercial side has been admirable.
No, I agree. I think certain other clubs, and you mentioned a couple of them, have displayed some pretty impressive growth in terms of commercial revenue. Even Manchester United, who for many years had flatlined pretty much around the 250 to 270 mark, broke through the £300 million barrier. And that was at a time when, there were doubts about, whether Adidas would look to renew on the same terms, which had been 75 million per annum over a 10-year deal, plus a little bit of additional payments. So typically those Manchester United, Adidas payments were turning out around 79, and they surprised people when it was announced that the deal had been extended and renewed for in the region of 90 million a year. So yeah, certainly the commercial market for football clubs, not just those in the Premier League, has bounced back quite impressively in the last couple of years post the pandemic height. So, the club and its commercial department should certainly be applauded for achieving that growth. And I agree completely. I think that 24-25 certainly should break through that £300 million mark, but it's certainly plausible that happens this very season. So let's see when the accounts are out, whether that's the case. I would have said let's wait until the Deloitte report is out in January, but for the second season running, the Deloitte estimation of the club's commercial revenue was way off, which I was a bit surprised by. So given that, I'm not going to hold my breath that it will be accurate next year either.
Yeah, no, they Deloitte has been reclassifying for certain clubs to, I think, provide a level of consistency, because there may be some things, I don't know whether it's some elements of broadcast, some of match day that may get categorized, whether it's match day merchandising or the central commercial income that comes from the Premier League. There just may be some things that are that most clubs categorize one way that Liverpool may otherwise. But I've noticed it for a few clubs. It's not just Liverpool that have some variation between what Deloitte reports and what ends up being reflected in, or how the revenue mix is presented in accounts.
Hello, I'm here to annoy you. I'm here to annoy you into listening to more of me and more of others on EPL Index. We don't just have the Anfield Index stuff. We've got EPL Index as well, which covers the entirety of the Premier League. And we have 3 podcasts and a whole bunch of really good writing on EPLindex.com. The podcasts are my own two-footed podcast, which is every day at 4 p.m., Monday through Friday, covering the whole league. We have A Tad Predictable, hosted by Tadiwa. You know Tadiwa, he does Anfield Index. He presents A Tad Predictable before every Premier League match week. And then Kevin DeVries and his crew on the EPL Roundtable, they're every week after the Premier League match week. So make sure you listen to everything we're doing on EPL Index and follow us there on Twitter at EPL Index. Thank you. Bye-bye.
Oh, sure. So moving on to one of our favourite acronyms when it comes to looking at club accounts, and that's EBITDA, EBITDA, earnings before interest, taxation, depreciation, and amortization. So for those that are less familiar with that term, it is trying to strip out certain transactions, primarily those that are not involving cash movements, to kind of show that's a great measure of kind of operational performance. And this is something that the club, generally speaking, does fare reasonably well relative to other clubs within the Premier League. So if we put perhaps the finances of, say, a Manchester City aside, if you compare against most of the other top Premier League clubs, Liverpool do fare reasonably well. So again, Greg, you've produced some really good analysis of this, not only for Liverpool but even for other clubs as well. So what's your kind of take on the club's position for 22-23 relative to the last couple of seasons, but also against other rival clubs?
Yeah, so EBITDA is certainly an important measure for Liverpool. It's listed as one of the key performance indicators in accounts. It's a proxy for those not familiar. It's a proxy for cash profit. And for Liverpool, the EBITDA figure, there don't tend to be too many adjustments from kind of bridging from EBITDA to operating cash flow. So it's a key measure. And Liverpool pre-pandemic impact tended to generate about 20 to 25% EBITDA as a percentage of revenue. And that has scaled back a bit. I think it was around 14% in 22-23. And that's just a reflection of cash expenses have been growing faster than revenue, both with, excuse me, with regard to wage growth and non-wage cash expenses when it comes to cost of merchandising, staging field matches at Anfield, transportation, utilities, all those other cash expenses that the club incurs. They have been growing faster than revenue. So I think that while we have seen EBITDA kind of, I guess, flatline a little bit and not grow as much as revenue has grown, but that's not unique to Liverpool. If you look at EBITDA for all so-called Big Six clubs in 22-23 compared to 5 years prior in 27-18, I think only Arsenal had a higher EBITDA compared to 5 years prior, and that wasn't maybe reflective of big growth either. So it's a common theme that cash expenses have been growing faster than in revenue. So it was, there is strong EBITDA being generated, but it's maybe not where the club would hope. And I think with some of the wage bill rebalancing this past summer, and maybe, we'll talk about wages, of course, but bringing wages down as a percentage of revenue will help boost that number and kind of increase that cash generation as a percentage of revenue.
Yeah, absolutely. And I think with the current year and when the accounts for 23-24 are eventually published, I think you and I and others that do follow the club's finances quite closely certainly anticipate there should be a pretty reasonable reduction to the overall wage bill, which was £373 million, which is a club high for any financial year in its history. That is certainly something that was, as you touched on, a bit of a surprise. It was a surprise because, the club is one that operates a kind of a remuneration structure that is reported to be more incentivized than perhaps those of other rival clubs. And the fact that the club didn't finish in the top four and didn't get very far in the Champions League, there was expectations that the wage bill should still be down compared to the previous season's £366 million, despite the fact that obviously there were a range of contracts, renewals, extensions, the most notable of all being that of Mohamed Salah, who signed a new deal which reportedly increased his base wage to a weekly $350,000 a week, plus obviously bonuses on top of that. And that is one area, Greg, that I still slightly struggle with in terms of trying to reconcile that against the overall revenues of the club. I mean, for a while pre-pandemic, that wages to turnover ratio hovered in and around the 57-58% mark, and it is now 63 or so percent. But I do certainly anticipate, like you touched on, that it will come down. I think it will and should be down quite significantly due to a number of big contracts dropping off the wage bill. Your Hendersons, your Milners, your Fabinhos, Naby Keita, Oxlade-Chamberlain, and also what you'd expect to be a significant drop in bonus payments related to European competition. You would expect bonuses relating to appearances, goals, clean sheets, etc. in the Europa to be paying significantly less than in the Champions League. But again, we'll have to wait and see exactly what the accounts show. But is that something that surprises you, Greg, or do you think that the wages are in line with what you'd expect relative to the turnover and also the kind of model that FSG like to operate?
Excuse me. I was a little I was I was pretty surprised. I believe back in June I put forth estimates in the 350s. And I felt like I was higher than most that had thrown out figures. And my presumption is that as part of this progression and spate of renewals with extensions with key players, that
are you that person who has everything? The coolest merch and those must-have fan threads? Well, over at our Anfield Index shop, we've gone that extra mile when it comes to pimping up your Liverpool collection. From our popular range of bespoke design t-shirts, sweaters, hoodies and hats, to our signature edition mugs, prints and coasters, all provided with fast worldwide shipping. We have something for every red. We also stock official LFC merchandise and are licensed with the Premier League and UEFA to sell official iron-on shirt badges and sleeve patches. As a listener to this podcast, you can get 10% off everything with coupon code AIPRO10. Just head over to AnfieldIndex.shop or find us on Etsy by searching for Anfield Index.
The negotiating powers of those key players maybe oriented contract structures to be less variable. I know that in that Harvard business case study that was very good with Salah and his agent, they were, the commentary really pointed out that the mix between guaranteed and variable was a massive element of the discussions, and where there had been breakdowns, and it doesn't clarify exactly where where it ended up or where it met, but that was a key element, I'm sure, for other key senior players that have had one or two extensions over the past 4 years, that's also been at play. And after they've established themselves, perhaps it has come into either a higher proportion of guaranteed or variables that may be less difficult to reach. I'm not sure, but I think that as there is evolution of the squad, maybe some of those fall off. I think that there'll be that rebalancing, but that's the first thing that I think of as an explanation as to why there was still that creep up despite, or that absolute increase in wages despite poor progression, poor performance, not qualifying for the Champions League, and yet still have an increase. And there would be a little bit of impact from some of the non-player growth, but I would have expected a bigger drop off from variables, and that just doesn't seem to have occurred. But we'll see. I'm very curious to see how it breaks out. I think when I model 23-24 wages, I may just tack on a kind of an extra premium, because this is the second straight year that I've been surprised by the figure and put a projection that was low.
Yeah. I mean, it is one that certainly caught me slightly off guard as well. And I mean, I had originally anticipated that before these figures were published, and to be fair, Deloitte did get the wages about right in their report from a few weeks ago. But nonetheless, prior to that information coming out, I did expect that the wage bill for the current season should be anywhere from 300 to 320, 325. But I'm less sure. So, but I still expect it to be down quite significantly compared to 374. But yeah, it is a little bit hard to tell exactly where it'll end up. But yeah, that's something that I'd love for more information to emerge somehow about exactly to what extent recent contract renewals over the last 2-3 years have resulted in perhaps a shift away from heavy incentivization to less incentivization. But I suppose that one of the things that it does also do is kind of dispel the misconception that the club doesn't pay in line with a lot of top clubs. So a lot of fans get suckered into seeing reports of the basic wages and about this reportedly very rigid wage structure. But when you factor in all the bonuses and whatnot, the reality would seem to suggest that the club pays as well as nearly any top club around. And there's only a very small handful of clubs whose wage bill is significantly in excess of that of Liverpool Football Club.
No, absolutely, I agree. It's when I see things like Capology and other sites reference and showing the wage bill and just that big gap from what's presented there to reality, there are definitely some large individual salaries. Collectively, the wage bill's high. One thing that was interesting is they've since pulled it from the report, but UEFA published its European club finance and investment landscape report, I think maybe about 3 or 4 weeks ago. And yes, they had a slide in there that actually, at least for top end of the market, presented player wage figures. And it indicated that Liverpool's player-only wages increased from 261 million to 264 million. And I haven't looked back to see if earlier editions of that report, because it hasn't been on my radar, may have indicated. But I wish we had, well, within pretty much all club accounts, I wish there was that segmentation and more information. But I just found that extremely interesting that there was a figure out there to say, hey, player wages comprise, then this doesn't include manager and technical staff, but the player-only wages apparently were in around the low 70s of total wages, which is probably a little bit lower than I expected. But it is interesting, and I wish we had the full attribution of where wages go. But it's certainly a big player wage bill, and we'll see where it all lands for 23-24. But it makes it hard to model, makes it hard to predict when it is so opaque.
Yeah, no, totally. Nonetheless, I think those of us that are very interested in the club finances are almost awaiting with bated breath, albeit details that we'll have to wait nearly a year for, about the level of the wage bill for the current season. But yeah, that's something we'll certainly delve into at that time when the information does come out. But changing subjects, but sticking with players, and that is specifically to do with player trading. So in the 22-23 season, the club did go out and invest in talent, and the biggest of those in terms of incomings was Darwin Núñez. And in the January transfer window, a few months later, Cody Gakpo also arrived. And though obviously a few months prior in the summer, less heralded were the signings of Calvin Ramsey, remember him, and Fabio Carvalho. It was good to see the club investing into the squad. I mean, there had been complaints raised. It's fair to say that in prior summers, the level of investment was somewhat meagre, especially when you compare it to that of not only rival clubs toward the top end of the table in terms of stature, but even mid-tier clubs. You know, your Aston Villas, your West Hams, in terms of gross spend, net spend.
Hey guys, it's Eddie Gibbs from Anfield Index here. I hope you're enjoying this podcast, and I'm sorry to call time on the show before it ends. In the current climate, it's tougher than ever before to offer podcasts for free. At Anfield Index, we produce over 75 free shows every month, which I'm confident is unparalleled in the LFC sphere. Whilst we'd love to offer everything for free, the production costs now make this impossible. That said, we don't want to follow the model of other channels and lock all of our content behind a paywall. So what we've decided to do is to continue offering every show for free, but cut that offering to 30 minutes on our longer shows. So to get all of our shows in full and enjoy the best of everything we have to offer, we really hope you'll consider supporting the channel and signing up at AnfieldIndexPro.com. For about the price of 1 cup of coffee, you'll get every podcast in full with 0 ads. You'll also get access to our LFC VIP community, where you can enjoy live podcasts, engage with our podcasters, and chat with other Reds in real time. So that website again, AnfieldIndexPro.com. Join today.
Sports Social Podcast Network.